Good morning, Squadron, and welcome to the On Time, On Target morning briefing where we invest with fighter pilot precision every single day. I'm your host, Steve Ankerstar. We have a great show for you today. We're going to talk about private equity, how you can invest in it through the stock market, and then also how private equity works on the side if that interests you. Like right now, I have a Topgolf Southeast Asia deal on my plate that's looking for investors. So that is something that you really only have access to if you're an accredited investor and you qualify. So, and you have somebody who's in the know. So that is what we're going to talk about today. We also have a bunch of earnings rolling in, so a lot of good stuff. If you're catching us on replay, then thanks for checking us out. And if you want to join us live, we will be here. You can join us live for $25. Go to On Time, On Target now to get started. And with that, let's get going. All right, welcome everybody again. We're to the morning brief. Make sure you got your chat window set up and your Q&A window set up. I already see a little commentary in the chat. I've also put in good morning. I've also put some names in there. We're going to take a look at for our day trading. One long, I don't anticipate taking that, but if you're long only, like you're trading an IRA, well, then that's your only shot. Or the couple shorts I like are BlackBerry and Bed Bath and Beyond and Six Flags. So those are names we're going to take a look at. Make sure you have a call sign in the window there for participants. And standard disclaimer applies that if you are this is financial education only briefing. So if you are not a current client of On Time, On Target, or Afterburner Financial, I don't know your own personal situation, so you have to do your own due diligence before you act on the information you hear today. All right, our mission objectives: we're going to grow our money, protect our money, and live off our money. Today, we're really talking about growing our money, but you could almost say it's protecting your money through private equity investing, which is the topic of the day. And when you think private equity, it's cool. Yes, the returns are phenomenal, generally in your low teens year over year. That's the upside. The downside is you have to lock your money away for probably 7 to 10 years, sometimes 13 years. So there's a lot of people aren't up for that. So it's kind of you need you need to be, $1 million net worth to kind of get into this stuff anyway. But you really almost need more than that if you're going to sock away, $100,000 into Topgolf Southeast Asia and not see it for 10 years, right? So it's almost a protecting your money too. That's how you can think of that. Okay, our flow today is going to be long, short, open, short, long. We're going to go over the market review. Big red numbers this morning in the market. Headline reviews, there's going to be nothing positive there, just COVID. There's the 6 tickers we're going to take a look at. The last one, of course, is an index fund. And then our short-term scorecard, yesterday's trade did not work, the one that we took. I know another one did, and Burner, congrats on making money on that one. But overall, +8 for the month. This week we're +2, so +3 on Monday, -1 yesterday. So overall, looking good on the trading. If you have any contingencies, then go ahead and reach out through the email address there. All right, let's take a look at TD Ameritrade Think Pipes, which is not coming up. So let me get that back for you. And here it is. Share. All right. Let's look at where we are with the market. Again, this is a 1-year SPY left to right. Focusing really on the end, it seems like it's been a couple of big down days, but when you really look at it, we're still in the congestion that we've had since the end of August through September. So not a big deal. Today is down a couple of percent. Again, not a big deal. I know you don't like when I say that, but it really in the big picture is not. And that's why I show you these charts, is to be able to keep it all in perspective. is that, a month ago we were down here at 320, and even at that time I was saying, hey, heads up, we're going lower. We did not go lower. We came back, so bad on me there. But yeah, I think we sink right on into the election. And like I said yesterday, I think we sink, every day that we have. Obviously, we're all going to vote on Tuesday if you haven't voted already. But every day from Wednesday, Thursday, Friday on, that we don't have a winner or the loser does not concede, that's going to lead to a sell-off. So just get ready for that. All of your, if you're with me, all of your portfolios are already positioned for this. We expected it before the election, before now, actually. So we're already in the defensive crouch, if you want to use a fighter pilot term. Yeah, we're going to stay in a defensive crouch so we know what's going on. And then we're going to spring out of that with an offensive once we have our game plan together. So when you zoom it in, though, that kind of looks a little less pretty, if you will. This is Monday with the big move down and then kind of coming back. And then yesterday was kind of just a medium, meandering day until started selling off towards the end. But again, most of these losses are overnight and not much of a bounce yet. So really, there's not good news in the air, or really any good news that I'm expecting to come out of today. No stimulus, no cure, no vaccine, none of that stuff. It's just negativity associated with the election. All right, let's talk about our headlines. We're going to come back to the CNBC.com. I'll refresh for you. So here you go. Here's where we are currently. Dow down 600. So if you think Monday we went down 900 basically at the low of the day, and then we kind of came back up to 600 down. Yesterday was a couple hundred down, and today we're starting 600 down. So what do I expect? Yeah, I don't expect it may come back a little bit. I don't think we see green today, but or it can continue to sell off. Either way, defensive crouch kind of doesn't matter. We'll try to take advantage of it and make a couple hundred or $1,000 this morning in trading, just because we know the market's going lower, so there's lots of trading to the short side opportunities. But other than that, you just kind of have to sit with your long-term portfolio and wait it out. All right, Asia mixed across the board, not moving a whole lot. Europe down big. Look at those kind of numbers, right? So a lot of this is a hangover from Europe and where Europe is. Tail wagging the dog sort of thing with the markets there. All right, here's our numbers from yesterday. You can see the NASDAQ was actually up. When you think of, I think Apple ended up in the green. A few other big names ended up in the green yesterday. But for you think your bigger and more industrial type names, those are down again going into the election. And VIX is spiking. The VXX is on the way up as well going into the election. So we called that. Once it gets a little higher, for those of you that still have it in your portfolio, I will look once it hits 30 or so. Probably just going to go ahead and move on out of that, except for maybe 100 shares. I'm going to hold that into next week. All right, bonds selling off a little bit. Oil down to 37.50 basically. And gold and silver selling off. Look at that 4% move down in silver. That's why when you think there's no brainers in the market, a complete no brainer right now is to buy precious metals going into the election, right? And then you see a 4.5% downtick. So that's why you don't put it all in on your sure bet, right? Because sometimes the markets just don't act the way you think. And that's a great example of it. I have no reason for you on why silver would be down almost 5% from yesterday. Okay, let's take a look at the news. Okay, testifying in Congress. If you haven't watched The Social Dilemma, seriously, stop what you're doing. Go to Netflix, watch this. Not right now, but once I'm off the air, go. Got it. I'll come back to that in a minute there, Burner. Yeah, if you we have the big tech firms testifying in Congress. This is a real problem. As the Section 320. If you're fluent in this, I'm not going to go into it a lot. But should they censor? Should they not censor? Are they too big? Like I was saying earlier, go to Social Dilemma and check this thing out because it really offers an interesting perspective on life. I'm going to go ahead and break for chat just a second. Yeah, silver is a good ticker, SLV. I see the TD Ameritrade. You're not going to get Bed Bath & Beyond sell short. I will try it here in Schwab, and that may be a limitation of TD Ameritrade. I know you've run into some issues there, Burner. So maybe we switch you to Schwab to have a little more options. All right, let's go back to our headlines. Chewy, you know about Chewy, not the Mexican food company, that's Chewy's, but Chewy is the pet company. Again, virtual vet visits. Interesting. I had not heard that. Let's see. Boeing's all over the news for negativity. They had earnings and missed. They knew they were going to miss, cut thousands of additional jobs. You just hate to hear that. Let's see. There is some talk about whether the whole housing market has bubbled. And I know a lot of you don't care because you're in the houses you're going to be in for a long time. But if you are looking to move or something, don't expect housing price to go up forever. People tend to think that that's the case just because it has gone up significantly. So don't bet the house on your house, right? Is that the phrase of the day? But expect that might come in now that everybody's refinanced. We might not be getting this surging housing market anymore. All right, holidays are coming up. We talked about that yesterday. New retirement bill has perks for seniors. Hard to believe I'm almost a senior, but I have to look into that. And student loan borrowers. I don't know the headline associated with that. I'll have to check back on it, make a note for myself, and report back on it tomorrow. Dodgers won the series. If you watched that great game last night, probably a coaching mistake, if you will. Earnings, Blackstone hit earnings. They're up a little bit. Excuse me. Boeing missed earnings, and a lot of other names are in the red for the day. All right, let's talk private equity investing. You know that my personal favorite here is Blackstone. That's the relationship I have. To be able to talk to a private equity firm directly, you need $10 million. So otherwise you have to go through an advisor like myself that has an open relationship with them. I had to sign a bunch of documents, and they put me through Blackstone University, where I become fluent in all of the terminology associated with private equity investing. And the point of all that is when I sit down across the table from somebody and explain it, that I have to foot stomp to folks that you are not going to be able to reach in and touch your money for 7 to 10 years. So in private equity is almost like this, and it is a black box. If you picture a black box, you put your money in, and then you get it fed back to you. Starting at year 7, you'll get your capital your back first. So say you put 100,000 in, and they start peeling $25,000 back to you at year 7. You don't pay any taxes on that because that's just return of capital until you get to year 10 or so. You start getting the gains, and then that's what's taxed. A lot of people don't like it because they A, can't change their mind. B, there's nobody to talk to see what's going on. I get calls from my private equity investors saying, hey, what's going on with this? And I'm like, I'll be nice and cordial, and I'll talk a big game. But honestly, the bottom line is I don't know. They aren't telling me anything either. And it's faith and trust, and we'll see you in like 7 years. So a lot of people don't dig that. Now, who does dig it? Private institutions. And if you want to make real money, i.e. in the low teens, year over year over year over year, this is the way to do it. They're truly, the private equity folks are that brilliant, and they are the best in the business. They know all about risk. They're the ones that stand to gain when we have market sell-offs or the 2008 crisis. They're the ones that have cash that can go in and buy, if you have a $500,000 home and you're listing it for $200,000 because you're hosed and are going to default on your home, they'll show up with a suitcase with like 80K in it and go, do you want 80K cash right now? We'll take it off your hands. The buyer's of last resort kind of thing. But that's who they are, and that's what they do, and they're very good at it. I consider Blackstone best of breed. There's other names out there: KKR, Carlyle Group, Apollo Management, Ares. We'll take a look at all those tickers here in a second. But if you want to say you don't want to put your money into a black box for 7 to 10 years, you want to just invest in the stock, the way to do that is through like their public tickers. So they have private placements, and you have to sign. If you've done this, it's a private placement memorandum, blah, 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 capital calls, all that stuff. That's kind of big boy and big girl investing. If you just want to buy a piece of it, I like the Blackstone stock. So let's take a look at this. They're making money. They made $1.10 per share. They're going to make $2.93 per share, which really takes their forward PE down to 17. Very attractive pricing. They pay a dividend. It's actually a distribution. There's some technicality there. But they pay basically 3.5% while you wait. All big red numbers, not big red, but at least red numbers for the year. So you like that from a valuation perspective, and nobody's really betting against it. So really, it's pretty attractive here, and it just sold off, and it's getting. It was barely in the green today after earnings. So I'm not really a buyer before the election, but this is on my buy list for right after the election. All right, let's go over to the big board. We will take a look at the other names that I'd mentioned here. They all kind of, there you go. There's a similar story. You see that Blackstone has not recovered to where it was back in February. KKR has, they're slightly above it. Apollo did, and now they've come back in. You have Carlyle Group looking more like Blackstone. You have Ares Capital Management. I have some of their bonds, so if you recognize that name, it's probably from the bond world that I've put you in. From Ares Capital, very strong business development sort of thing. And then if you just want the good old-fashioned index fund, PEX is the way to play it. All right, let's switch over to taking a look at we'll look at our long first. Fiverr. If you don't know what Fiverr is, I had some work done through Fiverr. It's basically an online marketplace for people to do logos and to do voiceovers and just really anything you want to go do gig work, do it on Fiverr. It's pretty cool. If you're young and want to do some gig work, go on there if you've got some skills, and it's a good gig. You get paid pretty well. So if you want to go long, take it's a little short on volume, but no doubt that the volume will come in. Again, you're looking at $1.50 for the stop there up at this point, and yeah, it's gapping up, but I would not go long unless you absolutely had to. As far as our shorts out there, we'll look at BBBY first. Burner said it's not available in TDA. They may already be out, or maybe they don't carry it. I'm probably going to still give it a shot in Schwab because I love this chart. Plenty of volume, 24 to 21, so $3 drop. Plenty of room to run. So this is kind of a beautiful setup for Bed Bath & Beyond. And I will probably call it BlackBerry at least once in the heat of the moment. But kind of everything's beautiful setup for Bed Bath & Beyond there. And then Six Flags, let's take a look at that. Six Flags Entertainment, again, short story here, revenue miss, nobody's going to parks, big quarterly losses, earnings snapshot, everything out in the forward is probably pretty unknown. So 2166 down to 1964. Maybe it continues to fall. We're going to be kind of a tight stop here to try to capture it, though, probably a 20-cent stop overall. So I like BBBY better, but 6 is just fine too. All right, let's go over to our trading setup and we will get going here. We've got SPY on the left. We'll put BBBY in the middle left. Then we'll put 6. And then we'll put Fiverr as our long off to the right. Again, I don't plan on taking that, but I'll call it for you. Excuse me, and get myself set up here. We have 1 minute to go. So I plan on going short, so make sure I'm in the right account. All right, BBBY. We'll see if I get it, if I take this trade. Otherwise, we'll switch to, let's see, for stops, a 20-cent stop on BlackBerry. So do some share math real quick. All right, and I'm ready to go there. All right, so again, BBBY will be primary, then 6, and then a Fiverr. All right, 30 seconds to the open. Welcome to the On Time On Target trade of the day. You see 4 screens in front of you. You see SPY on the left, so we can watch the market. That's a 1-minute chart, as all of them are. We have my favorite short as that left middle screen, BBBY. That's Bed Bath & Beyond, looking to take it short with about a 20-cent stop. We have Six Flags also with about a 20-cent stop going short. And then if you are taking a long, Fiverr is the way to go, FVRR. So I'll call that for you. I don't plan on taking it long. There's the opening bell, but it's there for you. All right, 14% down on BBBY already, so it's kind of out of our range. It fell hard off of this, so I would kind of want it to go back above 21 for us to take it, or at least chill out here. Six Flags is setting up better, so let me go do some housekeeping on my own tickers here. Ooh, I still like this. Still going BBY short, but we may switch to Six Flags. So stay nimble here. Not much movement in Fiverr, so we'll wait for the volume to come in. All right, that looks kind of frozen. Why is nothing moving? Can't trade if you're if things are down. That is for sure. All right, so being patient. We go to another screen and see if I can pull up these tickers while this is frozen. All right, we have BBBBY. Share this out to you if this stays frozen here. SIX. And Fiverr, FVRR. Zoom it in on today. All right, taking you over to Schwab. This does appear frozen, so we're getting out of pipes and over to Schwab. I'll reboot pipes on you. So, okay, what we're looking at here, we have BBBY. You have really the numbers you're going off of are the top, and then you're looking at the candlestick for both BBBY and SIX, as well as Fiverr here. Fiverr's dropping like a rock, so don't go long in Fiverr. All right, well, I reset Think Pipes. So be patient. Let's see. Bed Bath and Beyond it's up some, so there's still gonna be an opportunity to take that if we can get back in time. Six Flags actually backing up too. That's setting up nicely for an entry. Again, can't touch Fiverr to the downside. So BBBY, we'd be looking at when it drops back down to 21 would be the entry point there. There it is at the 21, going in short. So I'm in Bed Bath & Beyond short at 21. Again, it's a 21.20 stop. Let me get that stop in real quick. All right, there, still in the trade. It's looking good. I do have the Think Pipes back up, so I'm going to switch you guys back over to Think Pipes. Again, I'm in short on BBBY. All right, here's Think Pipes. I don't know why the SPY isn't coming up there. We'll deal with that in a second. All right, our trade's going well. It's about 1.5 R, BBBY. So let me get this put in here. That's not BBBY. This is what is going on. All right, even at 21 on BBBY. See if this one will take BBBY. And there it actually, yikes, that's showing 4 minutes up at 20:27. Is this delayed? Okay, here we go. All right, I'm back with it now. So the entry point for let me check and see what price I got here. I thought it was 21. Hot mess going on. Okay, this is not BBBY. Let's put 6 back in here. All right, trading BBBY is working fine. Catching back up on everything. All right, what is my price? All right, 21 is my price even. Yeah, I got it exactly at 21. So catching back up short here at 21 with a 20-cent stop. So up here is the stop. And again, 2080 is the first R point. which it's at right now. And then 2060 is the 2-hour point. And then, of course, 2040 is the 3-hour point. And if it backs up here again, we'll be out of the trade. Make sure I have my stuff together. Buy back. Yep, there's the shares. Yep. Okay. We're ready to go in case that hits it and knocks it out. Sure don't want it to. But if it does, it does. Here's the overall market. All right. We are caught back up on everything. Let's look at Six Flags. Burner, if you couldn't get BBY, you can take Six Flags here at 19.9 on the downside. The issue is you're going to have a big stop. I'm not going to take it personally because I'm chasing my tail here. But again, this is where you'll want to get into this. If it goes below 19.9, you can take it. If it doesn't, do not take it. It's got to show some weakness there. All right. Fiverr is not going anywhere long. Looks like our trade there, we're out of our trade, so make sure you are flat there in triple BY. Okay, I'm back out of that trade. So unfortunately, that tracked all the way back down to our entry point there. So we are -1 on the R for the trade. No big deal. Okay, the six. Again, not really going for us here. We're about 6 minutes into the day, so not really going to take a trade this late. Some other names to look at is Brinkers. This was a short name for Brinkers is several restaurants put in together. So that's got momentum to the downside. Some things that were on the upside, CSV up a little bit, BG looking pretty good there, up 6%. This is what you're looking for out of a long setup, for it to come down, pause for a second, and then you take it going back higher at around 58, and then it's got the nice move up there. Let's check out LKNCY. Luckin's down at 450. No fun there. Let's check out silver. Burner showed some interest in silver. Pretty flat. These things don't move. If you're using our strategy, they don't move enough during the day generally to get you to a 3R point. So it's kind of a 1R one way or the other. So, all right, just making sure I'm flat in my trade. I am indeed all the way out. So there you have it. Yep, good to go. All right, let's take a look at some long-term stuff now. Okay, here's our 5-day chart as well as our green and our red. Got Clickstream in the green, Sony in the green. Again, PlayStation's your PlayStation 5. You just can't find them. A couple of us were looking for them last night. You cannot find the pre-order really anywhere. So if you got a lead, let me know, and because I need to get one on order. So only a few names in the green. Almost everything is red. Callaway Golf. There was a headline that they're merging with Top Golf this morning, but I don't know what that means because Top Golf isn't a public company and they're really owned independently. So more to follow on what's exactly going on with Callaway and Top Golf. So I need to look that up. It's in my notes for the day. All right, Northwest Bio has been getting a hit, but it was up over 100% there over a couple weeks ago, so I'm not too worried. MasterCard's down over 5%. PLTR, Palantir, was up over 10 yesterday. See if it's holding 10 here. 10 is, again, that magic number of the direct listing. So, yeah, it's holding 10. It's actually touched 11 pre-market. Excuse me, at the end of the day yesterday, went all the way up to 11. So sinking back in, as long as it stays above 10, I think that's plenty healthy for it. All right. Let's take a look at private equity. Let's go back and look at the overall market and see how we're doing. So SPY's actually up from where it started. So was down over 2% at the market open. So it's hanging out just above that. Here was our trade. Our trade did not work. So we're busted out of that trade. And again, yeah, you could say maybe I shouldn't have taken it because it was already out of our zone of 5 to 10%. But certainly got to 2R before it reversed, not quite to 3R. Okay, let's go back to the Investopedia. Share that out to you. Okay, understanding private equity. We talked about a lot of this already, but 3.9 trillion assets as of last year, up 12.2%. If you follow Blackstone, the story of Steve Schwartzman, 1987, started his company with $400,000, and now it's worth trillions. Let me make sure I have this shared out to you. I'm not getting the magic greens thing. There we go. Now you should be able to see that. Sorry about that. So Steve Schwartzman, again, $400,000 to start Blackstone, and 2-3 decades later now, just a huge valuation. So obviously, very impressive lineup of folks. If you are in the industry and the finance world, working for Blackstone or a private equity firm for a couple of years is a good thing for your resume, because you kind of get a picture. You get to go hang out with the wizard, if you will, behind the curtain, and see how life really works. But again, we go through it generally through the public markets, but you can go off public and into private. But yeah, once you send your money in, that's it. You get statements on a quarterly basis. It's only valued on a quarterly basis, so it's not the day-to-day motion that you see out of the normal market. So you don't have a lot of visibility into these sort of things as you put your money in. Again, got to be accredited investor. So either you work in finance firm or in the finance industry, which is the latest change, that all of us that have a Series 7, Series 65, Series 66 are all accredited now. Or you're $1 million net worth or higher, or you're a high earner, meaning $200,000 to $300,000, whether you're single or married, per year. Those will, if you do that for 2 years, that qualifies you as well. And again, the reason I have this accredited investor thing is to protect you from the unknowns, because there could be, if you're going to lose money in private equity, it can be substantial. So consider. Blackstone has not lost money in a 33-year history over the course of any 1 year. So pretty impressive numbers. That's why I trust them. And they've seen, that's through 2007, 2008, where they actually did very well. All right, for accounting, they have to actually, once every 3 months, they do have to put a valuation on it. So if you think back to the beginning of the year, all the stuff that had to be valued at the end of March, because that's the end of quarter 1, obviously those valuations were horrid, right? So that can be scary if you put $100,000 in and it's showing you at $67,000, a few months later, just because we're on that dip. And you have to wait until the July statement to actually see it bounce back up. So it can be unnerving, if you will. So basically, they take your money in, and so picture the black box again. And what's different is, like with a bond, you put money in, and then you get coupon payments, and you get your money back. Well, think of inside this black box. Your money goes in, and then they invested. But say they invested in a building like SeaWorld, because Blackstone bought SeaWorld, took it private, flipped it, took it back, and re-IPO'd it. Well, if they do that in 2 years, that money that you put in, instead of giving it back to you with your return, they reinvest it. So your money stays on the Ferris wheel, if you will, for a good 7 to 10 years, and it may be part of multiple projects. So they have a lot of leeway. If something starts going south, they have a lot of leeway on what they can do with it. So, just because you score a double right away, they keep the money, and again, they trying to make you money. It is pooled money. So you're going to share with winners and losers across the board. But the way they can continue to make these returns is they have lots of big wins and a bunch of small losses. So think it back to our day trading strategy. You have big wins when you win, and then you have multiple small losses scattered across the board. But those are pale in comparison to the big wins when you have them. So that's what I've got for you for private equity. If you're interested in some of that stuff, or Topgolf Southeast Asia, let me know and we can go from there. All right, I do have a question there in the chat about Asan. Again, that's Asana. So let me share back out our screens, and I will give you my thoughts on it. We'll go to a little bigger chart here. Asana IPO'd about the same time, or same day, actually, earlier. It was a couple hours earlier, if I remember right. From Palantir. They're a software company. They're not quite as good as far as the long-term investment, but I still think they have a bright future ahead of them. I want to say 25 was the point where everybody got in. So everybody's down across the board in this thing. It's been showing some life. It's not going to battle the election sell-off at all. So just hold. Good question, Burner. We're holding ACE on. After the election, we'll reassess when the market can kind of pre-price everything back in and can start its way higher. So hold for now is my take on Asana. All right, that's all I've got for you today. Thanks for stopping by, and we will catch you guys in the morning tomorrow. Bye.